Let's talk to Adedayo Bakari at our studios at the Stock Exchange. Adedayo, do you think some of the decisions moving forward will have impact on the market? What would the market want to see, perhaps on the areas of legislation and what have you, to help not just the equity side, but portfolio investment into bonds and treasury bills, and of course help the naira get a lot more stable? What would you want to see there as part of the tough times that lie ahead, and it will affect the marketplace?
Okay, absolutely. It's going to be a tough time between 2019 and 2023. The question we should be asking is the president ready to take the tough decisions needed to reboost growth in the economy? Now, for investors, basically, what they are looking forward to is a system of policies that are a bit more market-friendly. And I'm going to give some examples. So in terms of, say, the business environment, for instance, investors want to see that the government is a bit more friendly to investors. Cases of high-handedness that we've seen in the past and the issues we saw with MTN, those are confidence sapping, and I don't think investors look forward to this. And also in terms of the business environment reforms that were started in 2016, markets will expect that to continue. Fundamentally, the major challenge the President Buhari administration will have to confront in the next 4 years is the dire fiscal realities. So revenues are still very, very poor, and we see a situation where the expenditure continues to increase. So at current levels, our debt service cost is around over 60% of revenues collected annually. So obviously that is not sustainable. So how will the president try to manage this situation? How do we bring a bit more sanity to fiscal policies in Nigeria? In terms of other fiscal reforms, in terms of tax collection, how do we go about this in ways that do not affect the private sector, which is the engine of growth in the economy?
Okay, great one there, Adedayo. Adedayo, just a second, a quick one there. Let me just add this to add to what you're discussing. Nigerian breweries just reported its full year 2018 numbers, and new excise duties took 25 billion naira out of Nigerian breweries' portfolio, which was paid to the government, aside the company's corporate income tax and what have you, 25 billion for excise duties. Now the finance minister says before the elections, toward late last year, there will be excise duties also for carbonated drinks, for those who produce soft drinks and things like that. If you look at 25 billion naira out of Nigerian breweries, that's quite a pile of cash. So you think business sectors should be prepared for perhaps this excise duty, which will be expanded across board, and perhaps the VAT for consumers who will have to pay more for things that we consume?
Absolutely. I mean, the government is desperate for more revenues, and we see a situation where they will continue to implement policies that will ensure they collect more revenues. Now, the overall impact of all these taxes on businesses is that in a situation where the consumer goods market, for instance, is currently very competitive, and what that means is businesses could not pass on the cost to consumers in 2018, and although we're seeing that this is getting into unsustainable levels, and we might see a situation where businesses are transferring these taxes onto the consumers, and the implication is that consumers will continue to face more pressure, between 2019 to 2023. Now, we expect that this will continue on so many dimensions, and based on our views, we think the government should actually take a more relaxed approach to its tax collection, because in the end, we need the private sector to grow. It is when the private sector grows that they deliver jobs, and we see a reduction in poverty levels, a reduction in unemployment levels. So overall, we think the government should take a bit more long-term view of growth rather than short-term benefits, which is immediate tax collections. We believe there are various ways to fund, say for instance, the infrastructure drive of the government, for which government wants to continue to collect revenues, bringing the private sector, incentivizing the private sector, which has a larger capital pool, to take on more of these projects, may be a bit more smarter than just trying to drive aggressive tax increases, which would, deflate the economy further. Overall, we think there are tough choices, tough decisions from, the oil and gas market. What do we do about the PIB? How fast are we able to implement it? Then you go into the downstream sector of the economy. Will price controls continue? This will continue to affect, downstream players in the market. Then you move further to the power sector. What is going on in the power sector? The, illiquidity from, across the value chain. How do we resolve this? Are we to expect further adjustments in electricity pricing? I think these are the tough decisions that have to be made. It's going to be a tragedy if consumers or the general populace continue to endure tough times, and we are not making the tough decisions needed, to improve our development over the long term.
Okay, Paul. In Abuja, we want you to wrap this up for us, and I'm just trying to look at today as the 1st of March 2023. So let's fast track that. We've had 2023 elections, and President Buhari will be retiring after his 2-term in office. So what's the structure or shape of the Nigerian economy that you can see, look ahead through your field glasses of the next 4 years?
Yeah, well, my response to that would be what is happening to debt market and what is happening to capital market. While capital market is highly unsure of what President Buhari would do, the debt market knows that because revenue is dwindling, government will want to borrow from the public using different instruments, treasury bills and bond. So you're going to see, we are already seeing the market being very bullish and wanting to give more money. Hey, the money you're looking for is here. You can do with it. We are happy. You can generate that. So what I see is Nigeria economy in which a lot of revenue, the government may not have so much revenue, but people at the end of the day have been able to innovate. But we need to say this when we talk about tough time. The note of warning here is if we tax the people more, it also leads to economic contraction. On the fiscal side, look at what's happening to monetary side. 14% NPR, which is also a policy that tightens the economy. At the end of the day, what happens to job? Because you cannot eat your cake and have it in economics. So you are 14% high. We also need to face tough times. The end of the day is what happens to job. Unemployment rate, how do we reduce it? Poverty rate, how do we reduce it? All of this will come to policy. I can only but wait till 2023.
I can only but wait until 2023. Thank you very much. We'll still be here by 2023. I wish the President, Mr. President, goodbye. Then we'll take a look at his 8 years of economic legacy. But for now, let's keep our eyes on what he does for the next 4+4. Thank you. Paul Alaje from SPM Professionals from our Abuja studios, and of course, Adedayo Bakare from our studios at the Nigerian Stock Exchange. Thank you, gentlemen. A very good morning to you, and do have a very profitable business week and on Market Street. Let's come back after the break. Of course, that's where we're going back to the fixed income space. A very big rally last week. The market gave President Buhari a very warm handshake of his second return. So